But most people, when you ask them, a lot of them think the bank actually has their money.
Yeah.
And so it's like, would it be the same if everyone was kind of educated on what exactly they're signing up for when they sign up for fractional reserve banking? But yeah, in
But they
general,
don't really want you to be educated.
yeah, I think they don't really want you to. So I think yeah, you can argue that a free market, especially when it's an educated free market and people know what they're choosing, I think obviously that's better than a centrally controlled price for money.
Right. So do you think we will end up in a place with no central banks eventually, long term?
I mean, if the more successful Bitcoin is, the more that makes that likely. I don't think it's going to happen in 5 or 10 or 15 years. But I think over the long arc of time, it's certainly possible. And that's why I'm less interested in kind of movements like and the Fed. And it's more like I'm interested in building an alternative and seeing that outcompete the Fed.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In today's video, Lyn Alden is a macroeconomist and investment strategist. In this interview, we discuss the role of the Fed and central banks, fractional reserve vs. free banking, how Bitcoin could change these dynamics, and if we should actually end the Federal Reserve System. Lyn Alden said, we actually now have ways to do fast settlement, payments and settlements that can't be reversed. It's starting to show that maybe you actually don't even need a central bank.
That'll less likely be an issue for a while because there's not that much demand for Bitcoin denominated loans.
Yeah.
And historically where there have been, it's for leveraging. It's for, you're borrowing Bitcoin, then you're buying Grayscale, for example. That's kind of an old trade of the past. There's not a lot of like commercial uses of a Bitcoin loan. While it has this kind of big price variance. So I think it's less about that and more just about, exchange hacks or custody hacks and things like that. For example, I don't really expect Fidelity or BlackRock necessarily to fractionally reserve it or rehypothecate it because it's such an easy mistake for them to get caught out on it. But it's possible. So for me, I think the bigger risk is probably state confiscation. That if everything kind of gets pulled into big, large buckets, they can say, look, these things are no longer withdrawable. And you can make up reason X, Y, Z. You can say it's
6102 in our Bitcoin.
Yeah, or at least saying, it's walled garden Bitcoin, and we can't let it into the wild because of terrorist financing or whatever the reason they can do. That I would consider probably the bigger risk, because I'm less concerned about how Fidelity manages their Bitcoin or BlackRock. I'm more concerned with what they might be told to do with it one day.
Because they want to steal it? Because their own economy is screwed? Their own currency is screwed?
It could be that reason. It could also be, over time, the financial systems become more and more surveilled, more and more controlled, and they don't really like free-range Bitcoin too much. It's harder for them to
free-range
Bitcoin. So they could eventually clamp down on that, especially if there's some major negative event and people get very emotionally driven. Imagine if 9/11 was obviously a very, tragic event, but then they were able to get the Patriot Act through fairly easily. And they're able to drum up, people's desire to go to war with a country that wasn't even involved in the attacks, Iraq. Imagine if there's some sort of similar major event and they say, look, we have to clamp down on Bitcoin. We can't let terrorist financing happen with it, or we can't let X, Y, Z, or, we have to have more control over this. And you can get kind of an excuse to block the exits. Even just financial repression. Like, for example, when Argentina is having a currency crisis and they pass things saying banks can't, offer it to their customers, or even fintech companies can't offer it. And they never say it's because we're having a currency crisis. They say, look, it's, money laundering and AML, and we have to maintain bank stability. They'll say any number of kind of normal sounding jargon for why they can't do it, when really it's because they want to slow down their currency crisis. You see that with Nigeria, you see that with Turkey. And the way they're often phrase it is either something like that, like we want to do safety and stability, or they'll blame, quote, speculators. The people are speculating with the currency. And so they'll try to block the exits there and kind of demonize a certain group. So I do have concerns around, in many jurisdictions, eventually a sovereign entity kind of taking over those big Bitcoin honeypots.
Bitcoin may be down around 3.2% in June, but the tables may turn before the month is out. Analyzing how Fed liquidity conditions impact BT, Tentox Macro revealed a close correlation, which has held for several months. The correlation between Bitcoin plus Fed liquidity never ceases to amaze me. He wrote in accompanying commentary on X. Liquidity bottoms in the coming 10 days, then rips higher again. Get ready. A chart from his proprietary macro data resource, Talking Macro, showed BTC price highs and lows sensing with local peaks and troughs in Fed liquidity. Even Bitcoin's latest all-time high of $73,800 in mid-March was accompanied by a liquidity spike. Clarifying how liquidity is calculated, Tentox Macro confirmed that the figure is based on a mixture of Fed assets, repo markets, treasury data. Talking Macro referred to problematic short-term headwinds for Bitcoin, noting a new decline in inflows to the U.S. spot Bitcoin exchange-traded funds. After seeing their second highest daily inflows on record in early June, the trend reversed, with the past 4 Wall Street trading days conversely seeing net outflows. Data from monitoring resources, including United Kingdom-based investment firm Farsight Investors, with the 4-day outflow tally at just over $700 million, still less than the June 4 $886 million inflow. Anticipation continues to build for the third quarter and beyond when it comes to a new wave of institutional interest in Bitcoin, as U.S. wirehouses are predicted to gain access to spot ETF products. That event forms a key point on the radar for those eyeing Bitcoin's continuing transformation into an institutional heavyweight investment class. Among them is Cathie Wood, CEO of asset manager ARK Invest, one of the spot ETF providers. No platform has approved Bitcoin yet, so all of this price action has happened before they approve it, and so we haven't even begun, she said in an interview in March about U.S. wirehouses.
Yeah, I think there are interesting price signals from that. But I think also part of the issue is people underestimate the risk that they take on. And so with DeFi, it's less risky for the borrower, but it's very risky for the lender, because in addition to liquidation risk, you have hack risk.
Yeah.
And that's something that often gets kind of overlooked, I think. So it's not necessarily priced accurately. But I would expect probably over time for the Bitcoin collateralized lending rates to go down, because if you look at mostly how they work, like the ones that do it properly, like Unchained, for example, there's no rehypothecation. Yeah. Those have very low loss rates. I mean, 0 in many cases, because you're fully collateralized by the Bitcoin. It's a liquid market. Technically, the only way that you could really, as a lender, lose money is if Bitcoin has a very illiquid loss in price. So it basically it would lose value so quickly that you can't even sell the collateral and recoup the loan. So outside of that very specific scenario, it's a mostly risk-free lending. You'd expect the rates to probably go down eventually, but it's not a market that I follow super closely.
As the world's biggest cryptocurrency, Bitcoin continues to fall short. Sellers are making more bets on the downside, hoping the market won't return to $70,000. According to the on-chain analytics firm CoinGlass, a massive $1.67 billion short position will be liquidated if Bitcoin reaches the $70,000 level. This data is gaining massive attention from investors and traders. However, Bitcoin has been moving below $70,000 since June 7, 2024, and since then, it has continuously struggled to gain momentum, falling below the 50 and 200 EMA, indicating a bearish sign. Additionally, if the market continues to fall and BTC reaches the $60,500 mark, nearly $930 million in long positions will be liquidated. Besides this, Bitcoin's open interest, which unsettles BTC futures contracts across exchanges, dropped by 10.99% since it reached its all-time high on June 7, 2024, to $33.55 billion. This lower OI value indicates fear in the market, and traders are avoiding BTC this season. Following this continuous downturn in the crypto market, especially in Bitcoin, a crypto expert posted on X, highlighting that this continuous price fall in BTC has formed a bullish falling wedge pattern. However, the trader also added that stocks are making new highs, and we may see similar momentum. Additionally, another crypto expert on June 18, 2024, made a post on X, mentioning that the market is incredibly bullish right now, and also noted that BTC and Ethereum liquidations are stacked. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.